This is CA Sandeep Shah. Today we will be discussing SAE 3400, the examination of prospective financial information. SAE 3400 establishes the standard on engagement to examine and report on the prospective financial information, and also the examination procedure for best estimate and hypothetical assumptions. PFI in the short form is different from its historical information. This is a position which is likely to be there if the set of assumptions or the forecast was to be achieved. And since there are various reasons why PFIs are created, the standard helps the members in terms of giving the limited assurance on how to work around the PFI engagement. So PFI can be in the form of a forecast or a projection or a combination of both. We will subsequently look at the definition of what does forecast mean and what does a projection mean. What this standard does not deal with is examination of PFI, which is expressed in general or narrative terms. It has to be a specific and cannot be very general in nature. And so any assignment which is outside the framework is not to be treated as PFI. So what does a PFI can include? It can include financial statements, or it can have one or more elements of the financial statements. The purpose of PFI can be as an internal management tool. So take an example, if the management is desirous of investing in a particular expansion project and it wants to know what are the likely scenarios based upon the cost of investment and the achievements of the turnover, the cost, the profitability, the payback period, and for determining whether to go or not to go for the project, one can prepare a PFI with the assistance of the member. Or it can also be for distribution or submission to third parties. And the third parties can become lenders, it can be for the purposes of listing of the securities, or it can be even an investor who's specifically looking to lend for this particular project. So what does forecast and projection? As we saw earlier, that these are the two basic principles. So forecast means prospective financial information prepared on the basis of assumptions as to future events which management expects to take place and actions management expects to take as of date the information is prepared. So this is what we call the best estimate assumption. Forecast is generally more conservative in nature. You have some historical background available to you, and this is something which is little more predictable if one were to say so. In contrast, projection means PFI prepared on the basis of an hypothetical assumption about future events and management actions which are not necessarily expected to take place, such as when some entities are in a startup phase or are considering a major change in the nature of operations, or a mixture of best estimate and hypothetical assumptions is what would the PFI be. Projections generally is fraught with little more challenges, because this is like looking into the forward, where we really don't know whether that future looking statement or future looking actions will take place or not. So what does the standard therefore expect you to do depending upon whether your PFI is based upon a projections or on a forecast method? It expects to obtain appropriate evidence on the reasonableness of management's best estimate assumptions. Hypothetical assumptions have to be consistent with the purposes of information. PFIs are prepared on the basis of assumptions, and whether they are properly presented and adequate disclosures of all material assumptions have been made or not, that is seen. And lastly, whether they are consistent with historical financial statements or not. Before one accepts the engagement, it is also important to understand that the member giving this service need not necessarily be a statutory auditor. While the SAE 3400 talks about the auditor, but it does not require that one should be a statutory auditor to be able to perform the assurance engagement under SAE 3400. But however, before one accepts the engagement, one should consider what is the intended use of the information, because this is extremely important, that one should know that what is the intended use. Whether is it meant for a general or a limited distribution, because it can also be a specific preparation based upon the request of the lender or a set of investors. What are the nature of assumptions, the best estimates or the hypothetical assumptions which are being made, the elements which will be included in the information, and the period covered by the information. The longer the period, the greater the challenges, because the outcome is not necessarily under the control of the management. It also presupposes, therefore, that unless the engagement is accepted and all these parameters are known, one has to decide whether one will accept or withdraw from the engagement, because the assumptions are clearly unrealistic, or believes that the PFI is not meeting the intended end use. And if both these are there, the member should refrain from taking the engagement or withdrawing from the engagement. The most important aspect for quality of SAE 3400 would be the knowledge of business. And because one may not be an auditor of the company, one will have to ensure that this knowledge of business is gathered, and it has to be gathered at a sufficient level which will evaluate all significant assumptions. It begins with the internal control over the systems used to prepare PFIs. We must be aware that PFI can be prepared by non-corporate bodies as well. So there may be challenges built around the internal control in case of a non-corporate body, or even if it's a small proprietary or a partnership firm. The documentation supporting management's assumption, and here again the depth of level of documentation is a must, because that is the only basis on which the work can be performed. The extent to which the statistical, mathematical and computer assisted techniques are used, because you are going to extrapolate the financial numbers into future. So what are the various mathematical or statistical formulas which are being used? What are the methods used to develop and apply assumptions? This is again one of the most important aspect of PFI. And finally, consider the extent to which reliance on the entity's historical information is justified, and this would therefore depend on the quality of financial statements, the notes, the auditor's reports, and all surrounding documents which is being given to us for the purposes of looking at the PFIs. Period covered. We spoke about the fact that the longer the period, the larger the challenges. So the first principle therefore is that larger the length, the assumptions are going to be more speculative. It must not extend beyond the time for management has reasonable basis for assumption. And this is also what we call the sight of line, or line sight as we can call back, that there is a visibility period, and therefore it should not go beyond the reasonable visible period which is there. Some of the relevant factors are the operating cycle. So take an example that you may have a project which is, let's say, 3-year kind of operating cycle. So one should understand what happens during this operating cycle, the degree of reliability of assumption. And here comes a question. It can be in terms of your sales price, it can be in terms of your cost, it can be in terms of your the utilities, the capacities, both of the plant owned by the company, sometimes the subcontracting facilities. So whatever are the various assumptions which are being used, how reliable those assumptions are, and certainly the needs of users which are prepared in connection with the application for loan or for issue of securities. The factors in determination of nature, timing and extent of examination procedure. So here is during having looked at the background comes a question of what is the knowledge obtained during the previous engagement, if at all you had one. If you did not have the previous engagement, then comes a question that what is the management competence based upon the discussion dialogue with the various stakeholders from the auditee side. One will have to understand what is the competence of the those in charge of the management, those in charge of preparation of the financial statements. That will also give a kind of understanding that whether how well prepared and how well articulated they are in giving you the information which you are looking for. Skepticism is always the rule of the game. So one will obviously look at that what is the likelihood of the material misstatement arising out of the information which has been given to us for out of the past datas and the going forward assumptions which they have made. Going also, it is equally important to understand the extent to which the PIFI is going to be affected by the management judgment. Management can be extremely bullish, aggressive in terms of the sale price, in terms of the growth, which may be inconsistent with the growth which the industry or the product in which the for which the PFI is prepared. So one has to also look at that where does the judgment of the management gets impacted. What are the sources of information? And sources of information can be the data published by the government, the statistical bureaus. It can be some of the industry trends which has been provided. So one will have to look at the depth of the information which is available for the industry or the product for which this PFI is being prepared. Equally important is the stability of entity's business, and sometimes the challenge happens because if you are in a startup phase, you really have no past experiences to bank upon, and therefore there are going to be various other factors which constitutes the efforts which one has to put in the examination procedures, and obviously the engagement team's experience. Our work will be as good as the team members, their experience, their understanding of not only the auditing and assurance standards, but of the knowledge of business, the experience which they have gained for doing the similar work, and therefore the team constitution is extremely important. It will require some amount of technical knowledge as well, because there are cost ratios, there are technical challenges around the yield factors. So composition of team members is extremely important. When hypothetical assumptions are used, all significant assumptions are taken into consideration or not, and whether they are consistent with the purpose and whether realistic or not. This is one of the big challenge which is faced, particularly when it is a hypothesis. One has to focus on areas which are sensitive to variation and which are material in nature. When we say sensitive to variation, they are sensitive to variation because maybe your sale price is elastic, maybe if there is a drop in customs duty resulting into the prices of the landed products becoming cheaper, and therefore your price will undergo a change, or similarly vice versa when it comes to the procurement side. The same thing where if they are going to be dependent upon volatile material, so let's say if it is volatile based upon the fuel prices or the petroleum prices, one will see a significant challenge, and therefore those have to be factored in as well. If the engagement is for an individual component, so we saw earlier that it can comprise of the entire financial statement or can be a part of the financial statement. So one has to do that. If you are only doing a portion of the entire financial statement, then one will have to understand what is the correlation between the other component. Because if my yield or my the production is going to be impacted because I have one single line of production facility, where there are other products also which are going to use the production facility, and that results into reduction in my capacity. My PFI can undergo a change, and therefore one has to understand what is the correlation. It's important that we obtain written representations from the management regarding the intended use of the PFIs, the completeness of significant assumptions, and management acceptance of responsibility. The presentation and disclosure aspect of the PFI, we have to consider the requirements of the statute, regulations, and professional pronouncements, which will have a bearing on what should our PFI contain in terms of presentation and disclosure. We have to also consider that the presentation is informative and not misleading. Accounting policies and assumptions are clearly disclosed in the PFI. So if there is an accounting policy which is very different from based upon which the past financial statements have been prepared, that has to be necessarily highlighted, both because the two statements otherwise are not comparable. The date of preparation is properly disclosed. This is one area where we must realize that the management may have gathered information over a duration of 2, 3, 4 months. But finally, the day on which this PFI is prepared, one has to see that there are no significant changes. So let's take an example. If in the last 3 months, if the GST rates have undergone a change, then that has to be updated on the day on which the PFI has been prepared, because it will have a significant impact. And also, as discussed, that the adequacy of disclosure, if there is any change in policy, is a must. On the documentation part, as in every audit, in every engagement, it is important that your documentation speaks for the work which we have carried out, and in particularly to support the report of examination of PFI, and also to prove that the examination was carried out in accordance and in terms of the guidelines given by SAE 3400. Finally, having done this entire work, comes a time to issue the report. So you have two format, forecast model and on the projection model. So if you have, what are the standard areas in your report? The SAE 3400 does contain an illustrative report as well, but essentially it should contain the title and the address's name, the identification of the prospective financial information, because it is important to know from which page to which page, what is the title given to PFI, what are the references to the applicable standards on auditing, the management responsibility section, as we saw earlier, that management is completely responsible to give the information and the basis of assumptions. Where applicable, a reference to the purpose and or restricted distribution, because if it is meant only for a particular set of readers, our report must contain that this is limited only to those set of individuals. Statement that the examination procedures included in the examinations are on a test basis, because it is not possible to do 100%. SAE is not audit, and therefore it is a statement of a negative assurance. Finally, the opinion whether PFI properly is prepared on the basis of assumptions and presented in accordance with the relevant financial reporting framework. If there are caveats concerning the achievability of results, that must be given as well. And finally, the signature point. If there is a qualified or adverse opinion, one has to consider whether one should withdraw from the engagement, because we believe that the presentation and disclosure of PFI is not adequate. Adverse opinion or withdraw from the engagement if the auditor believes that one or more significant assumptions do not provide a reasonable basis for PFI, because you do not want to misguide the readers. You have a choice on disclaimer of opinion, or finally withdraw from the engagement if examination is affected by conditions that preclude application of procedures considered necessary in these circumstances. So this is equally important to be taken into consideration with Make in India initiative. SAE 3400, which has been in existence for more than 12 years, is an extremely important standard for members to use. Thank you.